Do you trade options and need help growing your account? Are you trying to generate consistent monthly income? If you said yes, then look no further. No matter your trading account size, OptionsTradingSignals.com will teach you how to find winning option plays, execute trades, and profit from the passage of time known as theta. Visit www.OptionsTradingSignals.com today. Welcome to the Technical Traders Podcast, the show that brings you technically proven strategies and trade ideas from experts around the world. We're going to help you make more money with less risk so you can take your trading to the next level. Now, here's your host, Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Mike, welcome to the Technical Traders Podcast.
Oh, it's great to talk with you. Thanks for having me on the show today.
Mike, can you tell us just a little bit about WallStreetWindow.com?
Yeah, sure. It's a financial website. And typically if you go to it, you'll see a couple blog posts. They're not all written by me. But the real heart of it is the email list. There's a subscribe button at the top, and every morning before the opening bell, I'll send out an email with a link to my market thoughts and then also links to the top news stories of the day that I believe people need to know about if they're, want to watch their investments or trade the stock market. And I've been doing it for over 20 years now, and trading and investing for well over 30. Now I'm starting to lose count how many years it is.
How did you get started in trading or investing?
Well, I was a college student in graduate school for history, and I wasn't sure if I wanted to continue in that as a career. And I just started, this was in the late 90s when internet stocks were really hot and there was an internet bubble and everything was going up. And I started to trade the internet stocks with $15,000 that I inherited, actually. And I didn't know what I was doing and turned that into 60 and thought, well, if I can, I got out of college and thought, well, I'll try to just trade for a year. And then I lost, most of that money. It turned into about $15,000, and then from then I had to learn what I was doing if I was going to keep doing it, and ran that up to about 100 in 1999. So it was an interesting time to say the least.
Is there anybody you really admire or influenced you to become involved in the financial markets?
Well, I would say that the experience I had starting out where I lost, had to get running up to 60 on just luck. And then over 12 months or so, turned that 60 into 15,000. At that time, I knew, I needed to learn, what I was about, how to do this. It's like, there was a book called Market Wizards, by Jack Schwager, and I think it was written in the 80s, but it profiled several hedge fund managers and just winning traders, investors that were famous at the time. I recall Jim Rogers was one of the people in there, and they all told a story that I was just living through, where they started out, they got lucky, and then they lost most of their money or all of it, and they had to take it seriously and figure out a way to win. So that was really a message I needed to hear, and I would say the number one thing that inspired me to take this seriously and eventually do well at it. But there's actually a good documentary right now I'd recommend people watch on HBO. I think it's called Icon, but it's about Carl Icahn and profiles him. And interestingly enough, he tells a similar story in there where he started trying to trade in the early 1960s and wiped out and said, I got to have an edge. I just can't be doing what everyone else is doing, and he developed one for himself. And it's not so much that there's one certain thing you got to learn or one technique or secret or something. It's more that you just have to take it seriously and realize it does take effort and work, and you have to develop some sort of strategy that works for you. And that's going to take, reading books about different investment techniques and kind of like get a blend of it all and then figure out what is going to fit for you. And that might change over the years. So when I started early, I was really a day trader, and now I'm more of an investor who tries to hold positions for several years if the market will let me do it.
So what is your trading philosophy? What set of principles, beliefs, or experiences drive your decisions?
Well, I'll go quickly back to the books that really inspire me because they'll help me answer your question. But there is one by someone named Stan Weinstein, Secrets to Profiting in Bull and Bear Market. The one up on Wall Street by Peter Lynch, How to Make Money in Stocks by William O'Neill. And the Stan Weinstein book really is probably the best book about charting and technical analysis I've ever read. And again, it's written in the 80s, and you can find you can get it on Amazon, but it's out of print. But I'd recommend people buy these 3 books. And what it really focused on is the trend in the market. You're in a bull market or a bear market, and if you're in a bear market, you can short stocks, bet against them. If you're in a bull market, then obviously you want to go long. But he shows in his book the best times to buy, and he actually lays out a strategy of when to buy that he thinks is the best. So learning all that was really useful to me. And then the William O'Neill book, he was the founder of Investors Business Daily, and in his book, How to Make Money in Stocks, he says that there are 3 things that drive a stock higher. One is the individual characteristics of the stock, its fundamentals. Does it have earnings growth? What's the chart of the stock? And he also talks a little bit about charts. And then the stock market, what's the overall market condition? But then he has a third factor, and that's the sector that the stock is in. And, he claims in the book, and I believe it from my own experience, that he analyzed, thousands and thousands of historical stock prices. And the number one determining factor of whether the stock goes up or down is what the stocks in its group are doing, its sector. So that combined with the Stan Weinstein thing, that's the primary way I figure out what I want to buy. It's what's the chart of the stock in the sector, and what's the sector doing relative to the stock market. So the stocks that tend to go up the most are the stocks that lead their sector, and that sector is outperforming the stock market. So as we're speaking right now, gold stocks in 2022 in the first 3 months are among the top sectors of the market. So are energy stocks. And if you look at gold stocks, Newmont is one of the top performing stocks in the entire S&P 500 because it's in that sector. Whereas a lot of stocks in the S&P 500 are down year to date at the moment. And Exxon is one of the top performing stocks in the Dow 30, and no coincidence, it's in the energy sector. So to me, that's the key. It's what is really closely following what the sectors are doing, and that's something really hammered home in that William O'Neill book. So I think that's probably one of the most important things I really believe in.
What's your favorite type of analysis or indicator you find helps you with your trades or investments?
Well, the relative strength indicator, which what that is doing, it's dividing the price of a stock or fund with another stock or fund. So the way I use it is I'll just talk about the gold stocks. GDX is a gold stock ETF. You take GDX divided by SPY. It's like it'll create a ratio, a number, and you plot that out. And what that does is it will show you how GDX is performing relative to the S&P 500, which price is going up more than the other, or not going down as much as the other. So that helps me visualize how a sector is performing relative to the stock market. And after that, the simple 200-day moving average, I would say, is the most important price indicator. And, if something is in a bull market, it will trade above the 200-day moving average, and that will act as price support on a long-term basis. And typically the stock market, when it's in a bull market, will touch that 200-day moving average once or twice a year, give you a good buy point for the broad market. But if you're in a bear market, what will happen is prices will go below that, and then you'll get bear market rallies up to that 200-day moving average where things stall out. And that can last for months, or after 2000, it lasted for about 2.5 years. In 2007, it was close to 2 years. Right now, we're in a situation where the NASDAQ has fell below that several months ago. And so did the Russell 2000, and it's rallied into it and stalled out. So that says a lot about what the market condition really is. And, at the moment, this would all suggest you stick with something like gold stocks, energy stocks, and avoid most of the NASDAQ 100. So all this can tell you, where's the best way to make money, or where should I be invested, or if the gold stocks eventually go below that 200-day moving average, then I would want to get out of them, possibly.
What's something you wish you would have known before you started trading and investing?
Well, one of the biggest things I had to learn, it took me the longest to learn, is to really hone down a money management strategy. So, and I knew I always needed that. I actually always suspected that if you just had a good money management strategy and was flipping coins, you might be able to make money on your trade. But there really isn't any mapped out in a single book. In fact, I don't know of one book that is about just the money management strategy. And it's the topic that's least interesting to people. That could be why it's more exciting to think about what you can buy and have it go up. But, the very first thing I ever heard about it, just starting out, was like, if you can just risk $3 on a trade for every dollar, you'll just make a killing. But that's easier said than done. I mean, to find opportunities where you're going to triple your money, that's pretty hard to do on a consistent basis, much less on a short-term basis. So when I started, the main way I tried to manage risk was through using stop-loss orders on my position. And typically I would put it on the lower, right on the low or right below the low of the previous month's low. Some might advocate, put it on a certain moving average. And if it goes below that, you can you use that as a risk loss point. and then figure out, okay, where would that, potential loss be? How big would it be? And use that to define how much you're willing to lose. And that's sort of more or less what I did for several years. But around 2014, I learned of another strategy, which is what I really do now, and that's just a rebalance position on a periodic basis. So most investors, even, they'll say have 50% of their money in stocks and 50% in bonds. And if I wouldn't do this now, but historically it had been a good strategy to do this, to rebalance a 50-50 bond stock account, because when the stocks would go down, usually bonds would go up, and then you could rebalance it, and that would be a way to manage risk, boost returns by, in effect, selling something when it goes up, buying something when it goes down. But what I do is apply that to not investing like half my money in stocks, half my money in bonds, but in a mix of sectors and different asset classes. So the problem is today the bond market is really in a bear market. In bonds themselves don't pay as much as the rate of inflation, so they're very difficult to use as a safety portion of a portfolio. So I'm having to do that, with say gold or silver in a mix of different asset classes, and be a little bit tactical, a part of my account, flexible meaning. So I think what I'm saying may sound complicated, but it just amounts to figuring out how you're allocated, and try to be in a mix of different things, and just and rebalance them periodically.
We'll have more with Mike Swanson right after this.
Are you ready to follow a proven trading strategy? Do you want to own the strongest index, hottest sectors, and bond ETFs only when they provide an opportunity for growth? Now you can with the Total ETF Portfolio Trade Alert newsletter. Follow our long-term investment positions, active index and bond trades, and own the hottest sector ETFs during stock market rallies. Visit www.thetechnicaltraders.com to learn more.
Welcome back. We're speaking with Mike Swanson. Mike, do you think inflation is peaking, and how will we know when inflation is actually topping out? And are there any indicators or signals that we should be watching for?
Yeah, as we're speaking, I don't think it's peaking at all. And I believe inflation is driven by rising commodity prices. I mean, they have the CPI index that, factors in rent and energy and all the different things in it, various consumer items. But energy is a big component of it, and energy is obviously, one of the dominates the commodity market. The energy market is, I think, close to 50% of the Commodity Research Bureau index. So when commodities go up, I think that's what really causes inflation. Now, why they go up, that's a whole other topic. But just to make it simple, commodity prices are continuing to go up. We just saw the CPI come out at 8.5% a few days ago, and there are people that are saying, it's peaking. Well, just in the days after that report, a lot of commodities have made new highs. So I see no evidence that it's really peaking out. And the big problem is that the price of oil in most in commodities in general really made secular lows in 2020. They had been in bear markets that were going on for years and made major bottoms. And then by bear market, I mean, they were trading below their 200-day moving average for years, especially things like food, corn, wheat. They were below their 200-day moving average for almost 10 years, some of them 12 years. And then in 2020, there was a final low when oil prices even went negative in the futures market for a few days. That was a secular bottom. And then within weeks, all these different commodities were above their 200-day moving average. So what that says to me is that event was the start of a secular bull market. And secular cycles tend to last a decade. So I think this inflation thing is going to go on and continue for quite some time. And you want to compare it to the past. I think it's like we're in 1972. If you want to think about the 1970s as being an inflationary decade.
Oh, time to get out the bell bottoms and the tie-dye T-shirts.
That would be more fun than going into the metaverse, I think.
Growth stocks and sectors of 2020 had a terrible 2021, but have been starting to bounce back recently. Is the recent move up a time to buy more or sell the laggards?
Well, I think one should sell the lagging positions. That's how I navigate the markets. If there's a sector and stocks in it that are lagging the S&P 500, I think you want to sell the bounces or even short them. Stocks like Facebook, for example, they might be things to actually short. And a lot of these things aren't even growth stocks anymore. They're not growing their Facebook, at least, and I don't have a position in it, just using it as an example. It fell over 20% in one day in January when it came out and said that it was its earnings were shrinking because the growth had peaked of usage of Facebook, the website, and they said they were going to make a shift to this metaverse and spend all this money to try to develop that.
What sector or asset do you think would hold up well if we enter into a bear market in 2021-22?
Well, I would say gold and silver at this point, because even though I'm bullish on commodities and I do own energy stocks, I do think that at some point there will be a recession and there'll likely some sort of pullback in commodities. Doesn't mean the end of a bull market. I mean, they can just pull back to the 200-day moving average. And they've been going up so much that would feel like a big correction for people if it were to happen. And at some point it will. But gold and silver, they tend to trade together. That's why I mentioned both of them. But I think at this point, if they've been trading opposite the stock market actually for the past couple months. So I actually think a stock market pullback would help them, would draw more money into them. And a pullback in the stock market in a recession, would make the Fed have to say, well, we're going to slow down on the rate hikes. And that would just throw even more, buying fuel for gold and silver. So I would say out of everything in the market's the thing I'm the most bullish on right now.
What's the best advice you ever received?
Well, I would just say take it seriously, that trading and investing seriously, that it's easy when you start out just to get all excited about a stock pick or an idea. So I would say like Bitcoin is an idea and crypto is an idea. And there's a lot of people now that have been excited about them. But I was excited about internet stocks in 1998, 99. They were supposed to change the entire world. And they did have a huge, the internet did obviously change our lives. We all use it all the time. But a lot of these stocks were just junk and they went under and the companies went bankrupt and and so forth. And I know, in that cycle, many people bought into a lot of these stocks and just rode them on down to nothing, and then got out of the market forever. They just gave up and thought, well, I can't make money in this. But the problem was they didn't have any sort of strategy at all. So that's the advice. You got to have a strategy. You can't just get excited about something and just, buy it and that's it. You got to be on top of what's going on, and it takes work. It's not like you're just going in the casino and playing a slot machine or something.
Mike, is there a topic, financial or business practice that you're really passionate about?
Well, I've been doing this for so long that it's hard to, and I've started businesses too, or been involved in businesses. So it's different when you first start out. I do think you can be more excited, and you're in a learning type mode, and you still have to learn different things as the years go by. I had a friend of mine, still a good friend of mine, that told me that when it comes to business, it takes like 5 years to figure it all out and kind of really know totally what you're doing. And that was my experience too with businesses I started, with trading. It took a couple years perhaps it took longer than that. When I first started trading, I remember hearing them people say, well, it takes like a year. Well, it took me a year to figure out I needed a strategy, and then it took me perhaps 14 years to really have a money management technique. So I'm kind of passionate about sharing my views, what I've learned, and try to help people in that way, and more so than when I started out. It's like a brand new thing. So I guess that's how I feel about it now.
Mike, thank you so much for being on the Technical Traders Podcast.
Thank you. Great to talk with you.
Our guest has been Mike Swanson, editor of WallStreetWindow.com. I'm Jim Goddard.
Thanks for joining us this week on the Technical Traders Podcast. If you found value in our show, subscribe and give us a rating or share it with a friend. That would be greatly appreciated as well. TheTechnicalTraders.com, your source for technically proven strategies to make more money with less risk so you can take your trading to the next level. Comments made on the Technical Traders Podcast are an expression of opinion only and should not be construed as investment advice or recommendations to buy or sell any financial instrument. This information is for general information and educational purposes only. Guests on the show are not compensated for their participation. To view our full disclaimer, please visit our website at www.thetechnicaltraders.com.